Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Yes, this is a Thursday version of the askSlim Market Week because we are going to be spending the weekend in Las Vegas at the Expo, the Traders Expo this weekend, and I'll be there on Friday and Saturday. So we just wanted to do this a day early and make sure that we got the Market Week show done, so nobody out there would be disappointed. The stock market has had a choppy week this week as investors waited for some big news. Not a lot of ground made either way, but there was some pretty good movement here on Thursday. We're now just past the midday mark here on Thursday. The big news items, of course, the Federal Reserve news coming out, the tax cut announcement, and the coming announcement later today on who is going to be the new Fed chair, though they've leaked that pretty much. The Fed did nothing. I actually thought that they might even tighten because I thought Janet Yellen might want not to be accused of being behind the curve, assuming that she is going to be no longer be the Fed chair as of February. But that did not happen. They actually did nothing, said very little about any policy change, and still they're saying that December looks like the likely time for the next tax hike. As far as tax cuts go, well, there was a lot of leaking going on, and the market was very choppy. 400-page tax plan coming out, and this is not tax reform at all. It's not benefiting all. As a matter of fact, there are some people really in the middle class that look like they are going to pay more taxes. It's going to increase the deficit pretty significantly. There's some text in there that looks like they could put in a consumer tax. That's actually a VAT tax. So when the market got hint of that, it was moving to the downside. When the market got hint of the fact that they were capping real estate taxes on new homes, everybody who owns a home is grandfathered in, but new homes above $500,000, well, the luxury home builders got hit pretty hard on that news, along with Home Depot and Lowe's, and that's pretty bad news for that group. So we'll take a look at some of those stocks in just a couple of minutes in here. Corporate tax rate going down to 20%. They originally wanted 15%. The repatriation tax, in other words, for the companies that have a lot of money outside of the country, that'll be at 12% instead of the 10% they were talking about. At 12%, you got to really wonder whether a lot of that money is going to come back to this country. This is not supportive to a lot of big growth. The fact that it could move it up to 3 or 4%, I think, is not realistic at all. It's not going to be passed easily. There's going to be no Democrats that vote for this bill at all. And this is overall, I would say, disappointing. And what's baked in the market is probably something that would have been a much better tax reform plan than this one is. As far as the Fed chair coming, well, that is leaked that it's going to be Powell, and I just plainly want to puke at that one because Powell is very much in the same type of Fed chair that we've had in Bernanke and Yellen. He's been mostly on their side all along, though he did push back a little bit on the last QE. That is a person that will pretty much continue the same policies that we've seen, which are bubble bust policies. And he'll be the one that'll be sitting in there for the next crisis, I pretty much guess. So I'm really disappointed with the choice of Powell. I would have much rather seen Warsh. or I'd much rather see no Federal Reserve. What do you think about that? So as far as the stock market goes, we've had some choppy movement this week. We're going to look at a chart now on the 60-minute ES that is for the last 4 days, really, because we look at it usually for 5 days, but that's all we've had. This week is 4 days. So here is that chart right over here, and you can see in here that we have really been chopping around. The news has been pushing stuff around a lot this week. As far as Monday, we saw China. China had a big drop and kind of led equities lower around the world. But the market came back, our equities, and then had a big drop as the Russell started to get slammed on right over here. But then Apple saved it. Apple up 2% to an all-time high on a bullish call right there. Unemployment cost index went up, and consumer confidence to a 17-year high. Puts a little pressure on the bond market. Bond market recovering, though, and later in the week, continued to do a little bit better per expectation. So you can see in here kind of a choppy day here on Tuesday. Wednesday, strong world equities. Nikkei moves up sharply along with the DAX, both up 1.8%. And you had this strong overnight move, ADP 235,000 jobs. And that's leads up to the jobs number coming out on Friday. Here you got some selling coming in, though, and as we moved into the Fed decision, no change as you can see, and the market had an unusually weak afternoon on a Fed day. Now rumors came out here late on Wednesday when we saw things started to come out on the tax cuts that it will be temporary and expire after 10 years. Well, that proved to be incorrect, getting lots of rumors around. And then they leaked out that the tax cuts would be limit the amount of deductibility of the real estate tax, and then you got this big slam in here that was going on. You came back on the announcement and now selling off. This rally in here was based on the Russell ticking up, as there are aspects of this policy that would benefit some of the smaller cap stocks. So that's why you got a Russell pop. But now, as you can see here around midday, you're getting a little bit of slippage in here, but a choppy period overall. After the close today, Apple earnings, and then the job numbers come out on Friday. So that's what's been moving the market around for these last couple of days. So the stock market does get this pop and drop and pop and drop all week long, and the jury's still out on all of the big news this week. I see nothing in here to celebrate that investors haven't already celebrated. You might say that old cliche that things seem certainly baked in the cake. This huge tax bill, 400-page, is going to bring a huge fight that is likely to take a long time before we can get anything passed here as far as the tax bill goes. And I think there's a lot of Republicans that are going to push back on a lot of this. And another thing that's important to look at is the yield curve is the flattest since 2007. Now, as yield curves start to flatten, the market starts to struggle because it's harder, especially for the financials, to make money. And that could be spelling that we're likely to be topping here in the financials. We picked Goldman Sachs recently as one that we thought was topping and likely to move to the downside. So we see for the stock market the risks are mounting, that the news has already been accounted for and way more, and we wouldn't be surprised to see some significant pullbacks. We've been saying that, and we think that the risks are even growing more as we speak. Let's take a look as we move to our best and worst stocks for the week. Best and worst stocks for the week. We're going to really put a little bit more focus on maybe opportunity than on the big movers. Lots of earnings reports coming out and lots of, I would say, pretty good opportunities and things that are showing up in bearish stocks. What's interesting is that there's not a whole lot of things going on in the upside stocks and what I think are any great opportunities. We're going to show you some stocks that pop to the upside on some news, and we're also going to show you 3 stocks that we think are giving long side opportunities. In the category of solar, there has been quite a pop in the solar group. Actually, First Solar led that last week as the on Friday it had an extraordinarily strong earnings report. Got a very, very big pop. And then it continued and is basically unchanged for the week, but it has led the group up. Let's take a quick look at First Solar in here. As you can see that it had a good move to the upside. Here's that First Solar chart. Now this is a weekly chart for people that are new to our show and new to our service. We do cycle analysis. These bottom arcs that you see right here are called cycle brackets. They help us see with the repeating rhythms in the market, the cyclical patterns that are essentially a visual depiction of money flow. So this is a really objective way to look at, and it's really totally art form. So it takes a long time to really get your eye on it, but you could see the important low right over here and low right over here where these nested lows are. This one had a little test of that low and then pops to the upside, and that was one that really made us doubt this stock could move, but it had a huge earnings report and huge upgrade. So really a lot of strength that we see here in First Solar. We think it's going to try to get up there to about 64 right over there. Take a look at one more stock in here, CSIQ. This has been our favorite in the group. You could see it's traveling in that uptrend right in there. It's on my list of the best stocks for 2017 that you can see coming down right there. It's had a decent 2017 right now, moving up from 13 to 18, so pretty strong. And here is the resistance zones coming up in here. So we think it's getting into a choppy area, but pretty soon we think you'll be able to buy that stock. Another one in the category is SunPower, SPWR. That's an 18% gainer on the week. That one is in a bottoming process. It took a long time for that bottom to form, but now we think it's looking better. It had its earnings report, and it was another one that was a surprise to the upside in the solar industry. And there's not anything in this tax plan that came out that says that they're going to pull any of the incentives for solar like they are doing for Tesla. Their tax plan is thinking of pulling those incentives. So we'll see if that sticks, but Tesla's not looking good. We're going to show you that in just a couple of minutes. In the energy category, we're going to look at a couple of oil stocks. Those stocks, Marathon and Devon. Now, Marathon is one of the stocks that lagged significantly and then all of a sudden got legs and started to move sharply to the upside. A 13% gainer in this week, looking really strong. This is our colored phasing in here. I'm just going to let you see these last few cycles right in here. And when you're green, you're in the rising phase. When you're yellow, you're in the corrective phase. And when you're red, you've had a breakdown and likely to move down sharply. You can see how that worked. Well, we've been in this green phase, and it stalled, but then started to move up again. So you can see this is the area of resistance around 16 bucks, and it's likely to kind of curl over, get a little correction in here. If it did in the next month, we think that would be a strong buy in Marathon. 13% gainer on the week, really strong. Devon doing better than some of the other natural gas stocks. Natural gas really struggling in the warmer weather. Here's a resistance zone, a lot like the MRO pattern, right? It looks like we could get some floundering in a little dip over the next month, but then it looks like it could be in better shape also. So what I mentioned to you was that there were 3 stocks that I really liked, and those 3 stocks are Well, let's take them one at a time. The first one we're going to look at is Lululemon, L-U-L-U. This is a really strong pattern in here, and I'll show you what makes it a strong pattern as we look at both the cycle analysis on the weekly and on the daily chart. So we're going to switch over to the weekly first. So a couple things to look at in here. What we call this blue line right over here that connects this cycle and this cycle is called the VTL, or the valid trend line. Once it breaks out, it's likely that it's putting in a bullish cycle. In other words, what's happening is the downtrend is ending and we're entering into a new uptrend. Then when you get a cycle that rallies and just doesn't give much ground and then sets up in the next bullish phase, well, look what happened here. This not much of a correction, the next bullish phase turning up. This is a very strong pattern, and it would take a break below 56.60 to end this bullish pattern. I doubt that that's really going to happen, as it looks pretty strong in here. So that's what we call a little early low, and that's really positive. You notice how it held above that support zone, that intermediate support zone. Take a look at the daily chart in here. Now, this daily chart is building what we think is a bullish flag. So our estimate in here is that we're going to get some, oh, this slipped. Okay, let's just move this back where it's supposed to be. It's amazing how that happens sometimes on here. Now you could see these lows aligning. So this bull flag right over here in this rising phase says it's likely that it's going to break out on the upside again. So Lululemon looks to us positive, weekly on the left, daily on the right, and we think it's in a positive zone, bull flag. That makes it bullish. Las Vegas Sands benefiting from better numbers out of Macau. Here's the same pattern in here. You can see it's really held up strongly in this corrective period, and now you can see that big upside turn right there. That looks like it's going to be continuing to the upside as we have this projected. So LVS looks really strong to us. Here's your daily pattern. You can see in here it's got this upside gap and continuing on the upside here today. This is a very positive looking pattern, and we think LVS is going to be strong. And Nike, NKE, another stock that's in a nice rising pattern in here. It had this huge decline, right, and then this big upside advance. This is only 3 weeks off of that low. It's very rare that that would be the low. Our upside objective in here is about 57, 58 on the upside. It's not a lot. It's not a really volatile stock, but it looks pretty solid. And you can see here on this daily pattern, another one of those flag formations that's building. Right around the 50, just under 54 is a screamingly strong place to buy it. That's where our buy zone is in Nike, and we think that that is a very strong stock. So that's a look at the best for the week, and coming up right now is the worst. All right, the worst stocks for the week. Well, I've got more to show you here than I did before as we look at stocks that have either had pretty big moves down or that are setting up for some big moves down. I'm going to show you a lot of breakdowns right in here. The breakdowns we look at are a little bit different than what other analysts look at because we look at cycle patterns. And generally, when there is a breakdown below a previous low, early in a cyclical pattern, that sets up for a big decline, a big lengthy decline. And we actually have some of those to show you right now. In fact, there may be a number of them. One of the steel stocks that we looked at right in here is a stock that we've been warning on, basically saying it was underperforming the steel group, and we were concerned that it was going to have a breakdown, and it really did. So that's AK Steel. AK Steel down 28% on the week on a surprise loss, and the opposite of that really was US Steel X, which did much better on its earnings. So this, you can see the cycles in here right there, right? The dotted line is the DBB, which is the base metals, and once it got underneath this important low over here, that was a cycle violation. It sets up a bearish pattern, and you could see it just accelerated accelerate to the downside. This looks like January to the downside. We're going to look for it to get back maybe down to that 3 3/4, 3.5 area in AK Steel. So that is a bad looking stock in there. And now take a look at this horrible one. We talked about this one several weeks ago when Hewlett-Packard came out and said that they were coming into the 3D business again and likely taking on these companies, Triple D and Stratasys. And here was your breakdown here like 3 or 4 weeks ago, and now it just absolutely collapses this week. This also looks like it could fall all the way to 6, and the next low is projected out to January. So that's pretty bad in there. Take a look at ANF. And you can see in here, it rolls over from that resistance area. Now, it hits this support. I'll give you a little cycle lesson right in here, and that is, if it can hold up, in this support area over here, you'll notice it projects to January also. We have a lot of things that project to lows in January, which leads us to believe we have a correction all the way into January coming. But you can see in here that there would be an inverted head and shoulders forming. So this support area, or somewhere in here between, we'll call it 10 and 11.5, is likely to be the low area, and then would probably set up a good rally after that. So, but it's got to survive the next 6-7 weeks in here in ANF. That moves down sharply as analysts downgrade that one pretty significantly. And Under Armour, UAA, is another one we're going to look at that's been just horrible. Now, this one is a really weak stock, and it gets cremated 27% this week. Now, if you look at these kind of dotted lines, when you see a dotted line, it just shows you that what we've done in here is, I'll make it a little wider for you to see, is that we have kind of shifted this pattern so it makes a little more sense to us on the lows. We think in the next 1 to 2 weeks this is going to make a low. Take a look at the daily chart right in here, and that points to 1 to 2 weeks also. You can see in here that once it got under this low over here, which was that cycle low, it collapsed in there. Note that the slim ribbon, which is a momentum indicator right here, gave a negative signal at that point. It gave a negative signal at this point also, and then it just collapsed right after that. We think the low is in about a week or so, and this stock will then be well buyable. Note that this was on my list of the riskiest stocks for 2017 as the stock moves down from 30 to 11 during that period of time. So that was a super call as the stock get absolutely hammered. That is Under Armour, but we are looking for at least a temporary bottom coming up. So we made some discussion in here about the tax plan, and that tax plan had negatively affected some stocks when they came out and said that there was going to be a cap put on the deductibility of real estate tax for homes over $500,000 in value. Well, the Fed's been blowing up that balloon again, so it affects more homes than it did before. Some stocks started to get hit. I'm going to show you, I'm going to put up 5 symbols for you right now that I think are in a lot of trouble based on the prospects for this part of the tax law sticking, which I think there's a pretty good chance it will, because it's already a compromise based on removing the entire salt taxes. So let's take a look in here as we switch over and look at Home Depot. Home Depot had a big rally on the hurricanes, but now it is rolling over. So you could see in here the Home Depot, it's still in this green zone but starting to roll over. There's support here. The best objective we have in this is 156. That would be really the area we would think it's going to go down to, but I think it really could be worse than that. Lowe's, LOW, is not as good a chart. And you can see this evening star that turned over right there, right at the 78.6%. We could see this one falling all the way back down to 70 or lower. This is a pretty ugly chart when you look at that. Take a look at XHB. This is the Home Builder Index. And you can see it turning over right in here. That's a classic evening star right there as it turns over. And so we think that this one is going to be under pressure Yes, right into January, which is, like we said, lots of stocks looking that way. Now, the KB homes and the stocks that, pretty much make lesser priced homes are not under a lot of pressure. But when you look at stocks like Lennar, which is a higher priced home builder, you could see this thing rolling over. We think it's going to get back down to $50. That is a bad chart. When you look at that, look what happened today, and look at this daily chart. See the island reversal right there, and then the engulfing pattern here? That is a sickening looking pattern. We think it's going to go down significantly. It had positive momentum. You can see right in here the green arrow. That's where the slim ribbon turned positive. At that point, it goes from 52 to 59, and it's today that is going to turn neutral. It hasn't done it yet, but I can see it in advance, and that's not a good sign. One more we'll look at in here in this category, TOL, T-O-L, and you can see in here on the weekly chart, it gets right up into that fib extension confluence, and now it's reversing this week. It's just rolling over, and when you look here at this pattern in here, look at this day in here based on that tax law, we think that TOL has got a lot more to go on the downside in there, and that is a pretty bad looking stock. A couple more stocks that I want to look at in here that I think are bad looking stocks and some downside opportunity. The first one we're going to look at is Tesla. Now, Tesla has got like bad news on top of bad news. We called the breakdown in Tesla going on a week ago and let our subscribers know about that. We even talked about it here on this show. And here is a look at a big breakdown in here in Tesla. Here we go again, where it breaks under this significant cyclical low right in here. You can notice what we call this nesting of lows. All of these cycles making a bottom here calls for a rally. You got the rally, but then it broke down, and look at it accelerate to the downside in here on these delays on its Model 3 lawsuits coming out about that, and then this tax incentives being taken out on the tax plan. The stock gets hit in a big way in there. Well, I could see the stock getting down to this 260 or 258 support over there. There is a ton of risk here in Tesla. And Facebook. This is interesting one in here. So you can see what happened in here. It's been a super bullish chart, right? Now look at this week. See the shooting star? But the 100%, the 78.6 and the 100% fib extension is often a target zone on the upside for bullish stocks. But look at right over here as you get this little abandoned baby right over here, and it turns down as it report earnings, and it talks about a higher costs coming to next year, legal costs, other costs, and that's going to hurt earnings going forward. You see the minor support zone right in here? If the stock gets under 175.90, and I think it's going to, it's likely to accelerate strongly on the downside in there. This looks like a big top to me, and I think Facebook is going to go lower. That is the worst for the week as we look at stocks. Some pretty negative chart patterns in there, and we're going to be right back with our short-term view for the coming week. Here we go. All right, this is our short-term view for the coming week. We do this every single week. A couple of announcements before we do that. First of all, if you like our charts here, you can become a level 4 subscriber and get all of our charts that we put out in our 80 best traded stocks. You can have these charts right on your TOS platform, and you would also get our rankings and trade setups, and it's a great table that shows you all of our analysis on an easy-to-read table with rankings on the long-term, intermediate, and short-term, plus our option bias indicator. Now, the option bias indicator is an amazing indicator to use, especially for option traders, on how to direct the bias of your positions. We have been writing for months, for over a month here, a script for that. Been working hard on it, and it looks like finally next week we're going to have this thing completed, and you're going to be able to have that right on the charts. Now that's for our level 4 subscribers, so look for that. And of course, all level 4 subscribers get all of our 250 plus videos also, so you can have the special on that, half price special, to try it for a month. So write me at slim@askSlim.com. I'm really excited about that option bias study that you can have right on the charts. You're going to love it. So our level 4 members that already, you're going to get that automatically, so don't worry about that. We'll be providing that to you. So the last announcement in here is that we're going to be showing a slightly reduced amount of information in the short-term view to make the show a little bit shorter. That which we're going to be taking out after today are the momentum studies that we show, and that is going to mean that our Future Speak video on Wednesday is going to be just a little bit longer, because we're going to move a little bit of the short-term momentum information into there, because we have got some redundancy going on. So for our people that only watch this show, if you missed that, please do become a level 2 subscriber, and again, I could send you a special for that, and you'll be able to then see those momentum studies. I'm going to show you some of those right now, but then starting next week they will not be here in this segment any longer. So what we always do is take an accountability of how we did in the last week. Well, in this case it would be the last 4 days, because we still have another day in the week. But I got to tell you, based on what our analysis was over the last that we gave you last Friday, this was our best analysis that we've done in many, many weeks. We have a plus 80% in here, maybe even 85%, as we really did really well on the dollar, the gold and silver, the bond market, and yes, even the stock market, which we thought would be small down. And the wiggle pattern that we expected on the short term was exactly as we were looking for. So the week has been really good, and I think that's going to help us moving forward as we project out in here and look at the these 5 markets right now. So we're going to start out, as we always do, looking at the short term of the light crude market. So here's light crude. Now, for speaking of momentum indicators, we're always going to be having the slim ribbon right on here. So you'll always be able to see that momentum indicator. And you can see in light crude it's been positive. And we saw the positive nature of the market changing. We thought in the last week that it would have a small pullback, and it barely pulled back in here, and then we thought what it would do would go up again. We're only going to get half credit for that, because it didn't pull back into that zone that we really wanted to buy it at, near the slim ribbon. It's been stronger than that. So you can see in here, now here's the momentum indicator we're not going to be showing you in this section anymore. After today, you could see that the momentum is still really strong in here in light crude. What we're looking for in the next week is really a tight range. So what we're going to focus on in here for you to see is these. Let's just look at these last couple of cycles right in here and look at the smaller patterns. So our expectation was that, based on following this pattern right in here, now you could see that right in here, it's exactly that we were going to get a rally and then a little bit of a pullback right there. So here it is right in here, and a little bit of a pullback. That sets us up for not being able to get underneath this rising slim ribbon. There's really not much room for decline in here, and this market is strong. So we're going to look for a tight range. We're kind of look for a rally and then a pullback, a range of about 55.25, maybe a little bit higher in here, and then, you know, pull back out over here again. So this is about 8-9 days from here right now. So that's kind of the pattern that we're looking at right in here. A tight range, maybe 53.75 on the downside, which is right over here, the top of the slim ribbon, and 55.25 up in this area right over here. Tight range in here for light crude. So as far as the dollar goes, dollar sign DXY, what we expected was that it would fail in a couple of days from last Friday. So here's last Friday right over here, and you could see it started to fail in there. And we thought it would get down to this minor support right in this area. It wasn't quite able to get down there. It's been a dull market for the dollar this week, but we thought it would be a down week, and it basically is a small down week. It was a little worse than that, but now the dollar's starting to come back a little bit. We're looking for a small down week again. We think it's going to get down below this 94.15 area, 94 right around there, into this minor support zone. You can see the momentum in here still to the positive side, so we don't see a lot of downside in here yet. Further out, looking at a little intermediate look, it would probably decline into here, get a little bit of a rally, and then this is a riskier period for it out over there. So that's a look at the dollar. As far as the euro goes, the inversely correlated, we were looking for it to make a bottom and then bounce. Well, you could see it's done that, but not much of a bounce in there. We were also looking for bounces in oversold Aussie and the Canadian dollar. Those got some minor bounces also, but really feeble bounces. They did not act as strongly as they could have in here. We're going to look for upside in here in the euro currency in the next week or week and a half up to this 117.85 area. So it's about a full cent on the upside in there, and then probably, you know, in a more of a base building period there in the euro currency. You can see here that the euro currency is still in negative momentum right there. So, you know, we don't expect to be able to get any real big upside in here. Note the top of this slim ribbon is about 117.70-ish or something like that. So we're looking for 117.70, 117.85 right into this area of the minor resistance zone in the euro currency. For gold, our upside objective for last week was 1284 in gold. Now, we thought it would be an up week. Let's just get a closer look in here. And the high for the week right over here, 1285. So it did exactly as we thought it would do. We thought it would be an up week. And what we think is that gold, which has been moving up, is weaker than silver. We think silver has a better shot at the upside in here. We're going to look for a little more upside, try to get up to about 1288, 1290 in that area in this minor resistance, and then stall and start to roll over. So, you know, we're looking for a little more downside in the dollar. We're looking for a little more upside here in the gold market. Note in here, gold market, not quite overbought in the middle of that slim ribbon, still negative momentum, so that looks to us like it's not going to be able to get a lot of upside in here. I'm actually surprised that Bitcoin isn't stimulating a lot more, but these patterns just aren't calling it yet, and I think that when Bitcoin loses its steam down the road and that bubble pops, gold is going to make a lot more sense. Here is silver right in here. Yes, I called it a bubble. Silver had a big up day that you can see right there. Based on these shifted cycle patterns, there was a low due right over here, so you can see that right there. Here's where the low is due here. They're a little bit off at that point. So we're looking for upside resistance right at about this area. That's 1733 to 1755. That's our projection. We think silver, is still in a pretty decent pattern in here, but again, what you can see in here is that it's way stronger than gold. Gold was way under the slim ribbon. Now this is above it. It's overbought, so it's likely to chop around by a little bit in here, but we'll call it a choppy up week in here for gold, and silver get up into this resistance zone for silver and then pretty much stall out. We think they're going to stall out in those resistance zones. For the bond market, /ZN. Now, what we thought was going to happen in the 10-year note was that it would have an up week. We thought it would get up and test the 125.20 number. It got up to 125.09, so it didn't quite get up to the level that we expected it to. We still project that it's going to get up to 125.20 in the coming week, but we thought it would be an up week. It stalled at that 23% fib, which isn't that unusual. We're still going to call for a choppy up week, an upward bias, and getting up and testing that 125.19 area. Note in here, it's overbought and still negative momentum. It has some work to do before it can have any kind of a rally that holds when we look at that. Here is the ZBs, that is the bond market, and our anticipated rally for the week was up to 153.10. It got up to 153.24, so it is stronger. In other words, interest rates fell more in the 30-year than the 10, and that represents the flattening of the yield curve that is going on, and what I talked about as a potential negative for the stock market. So nice engulfing pattern right there, made the bottom. We think that the 30-year is going to continue to test the upside of this resistance right around that 154 or 154.10 area. 154.08, I guess that is right there. So we think it's going to be kind of a choppy upward bias in there, and because we think the stock market, which I'll show you in a second, is going to pull back, it's likely to give that a little boost. But note in here, the 30-year has gone neutral and gotten above the slim ribbon, again overbought, so some struggle to get a lot of move on the upside in there, but into that resistance zone makes some sense. 30-year stronger than the 10-year right now, and that is a flattening of that yield curve. So let's talk about the stock market right now. Stock market looks to us like it is in an area where it's starting to chop and top. Now, it's looked that way before and managed to survive that. And here, all the news that we've been waiting for is here, and it's not as spectacular as it could have been. In fact, it may not even be good, and there is a lot priced into this market in here when we look at that. So our expectation for the week last week was a kind of a choppy toppy, test the highs, see if it could hold up, and what we had drawn on our notes and what we shared with you last Friday was that we thought it would dip, rally, and dip. That was the way we had it drawn, and that you can see is what happened, and a shallow movement in here. We thought it would get down into this rising support zone, that 23% right there, and that's exactly what it did. So what we're looking for in this next week is that this downward bias continues. If it gets under that 23%, that's around 25.65, then it could fall all the way down here to about 25.50, that short-term support. So we have it drawn pretty conservatively, like it's going to just, pull back in here, get support in that upper area at 25.64, try to rally again, and then the risk picks up after that, coming into following later in November. Now, if the decline gets steeper, you notice I'm not talking about a rally. If the decline gets steeper and hits this, it's likely to be something like this, much steeper than I just drew it. I drew it what I would consider to be optimistically, in other words, not a whole lot of decline, an additional rally in here, but we'll see. Remember 25.65, 25.64, if it gets below there, it really could accelerate to the downside. So that's our call for the coming week, is that it goes to the downside for maybe into midweek of next week, and then gets a pop after that. So it's down through Wednesday, Thursday, and then pop is the way that sets up. The NASDAQ sets up similarly. NDX, you can see that right in here as we look in here. Now this one has got a little different pattern, as it looks like it pulls down to around Tuesday. Here's this bottom of this support zone right over here, which is about 61.40. 61.45. The top of it is 61.65. So that's really the range that we think it's going to pull back down into and then get a big of a bounce. And then again, the risks pick up a lot after that. So we're going to call the week coming up that the market has a decline into somewhere around midweek in the coming week, and then gets a bounce. As far as the implied volatilities go, they had that big pop last week and then pulled back. We believe that the low has been seen in implied volatilities, and it'll be very soon that we get a big pop to the upside in there. That is the special Thursday version of askSlim Market Week. We hope there's been something of value in there. I want you to be careful because it is so unbelievably crazy out there. And we're always wishing you great trading.